I'm going to walk you through the enterprise value in 3 simple steps. We'll start from the calculation, move on to the application, and end with the limitation. As a reminder, I am not a financial advisor and am not liable for any results based on your decisions. This video is for educational purposes only. The first step is the calculation. The enterprise value is equivalent to the market cap plus debt minus cash. The market cap refers to market capitalization, or the total value of a company's outstanding shares of stock. Debt refers to both short and long-term debt obligations, and cash refers to the total amount of cash and assets that can be quickly converted to cash, like treasury bills or money market funds. Feel free to take a screenshot of this table for future reference. Now let's walk through an example with a company called the Home Depot, which sells everything from bathroom items to kitchen utensils and more. Remember, this is not a recommendation to buy, sell, or hold the Home Depot. I am just walking through how to calculate the Home Depot's enterprise value. Here are the values we are going to be looking for in the Home Depot's balance sheet. Feel free to screenshot this page for your reference as you walk with me throughout the calculation. So we're going to need 3 values: market cap, debt, and cash. So let's start off by going on where to find those values. So we search for Home Depot, Investor Relations, and that takes us to the Investor Relations page where we can find those values, right? So we're going to be looking for financial reports, and on here we want the annual reports. The most recent annual report is right here, 2023. Click on the PDF and open that up. So this is where we're going to be able to find the values of interest. This is the long-term debt, and the short-term debt is right next to it. So here we have debt and derivative instruments. So our short-term debt of Home Depot is going to be the maximum amount outstanding during the period, which was $1,453 million. So that's the short-term debt. We're also going to need the long-term debt. So Home Depot's long-term debt is going to be the sum of all these senior notes plus the finance lease obligations. So total long-term debt is going to be $44,111 million. That is going to be our debt values. We're also going to need the number of shares outstanding. So in order to find that, we're going to scroll up. So here we have the net sales, top left, operating expenses, operating income, and we have the basic weighted average common shares outstanding and the diluted weighted average common shares outstanding. So we're looking for the diluted values, and that is 1,002 million of shares. So that's the share value that we need, and we're going to be using that for the market capitalization calculation. We're also going to need the price. So the price of Home Depot is currently at $351.31. However, for consistency's sake, I'll be using the previous close price, which was $355.43. Now, the last value we're going to need is the assets. So in order to find assets, we're going to see right here, we have the current assets and cash, which is the cash that value that we're looking for. Cash and cash equivalents was $3,760 million. Now that we have the 3 values, let's walk through the calculation together. The Home Depot's market cap is $356,140 million, its debt is $5,564 million, and its cash is $3,760 million. Therefore, the Home Depot's enterprise value is $357,944 million. So what does this value mean? This enterprise value is the total amount a buyer would pay to purchase a company completely. The last step is to consider some limitations of the enterprise value. The first limitation is capital structure. Enterprise value accounts for a company's total value by including debt and excluding cash, which helps standardize the value irrespective of the company's capital structure. However, it does not account for differences in the capital structure between companies. For instance, 2 companies with the same enterprise value but different levels of debt and equity may have very different risk profiles and financial stability. Next are negative earnings. When a company reports negative earnings, the resulting valuation multiples can be misleading or difficult to interpret. This makes the enterprise value less useful for companies in financial distress, startups, or industries where losses are common, as traditional valuation multiples may not provide an accurate picture of value or performance. Last are the growth prospects. The enterprise value provides a snapshot of a company's current value, but does not account for future growth prospects or potential changes in the company's earnings or cash flows. Companies with similar enterprise values might have very different growth trajectories trajectories, risk profiles, or industry dynamics. Hence, enterprise value alone does not reflect future growth expectations. And there you have it. Thank you for watching. If you want to take a step back and go in depth on the market capitalization, click on the video link over here. If you want to take a step forward and learn about operating cash flow, click on the link over here. Make sure to drop a like, subscribe, and comment on other terms you want me to go over. Happy investing, and see you in my next video.